The U.S. stock market surged on January 21, 2025 with major indices closing higher. The Dow Jones jumped over 300 points, gaining nearly 1.5%. The S&P 500 and Nasdaq also posted gains of 1.2 and 1.8% respectively. This came as a relief after weeks of volatility. The rally was sparked by President Trump's announcement on trade negotiations. President Trump's announcement regarding tariffs sent ripples through the global trade landscape. While the delay in tariffs on Chinese goods was welcomed by many, his administration's overall approach to trade remains a source of both uncertainty and contention. The president has repeatedly employed tariffs as a tool to try and renegotiate trade deals that he views as unfair to the United States. This tactic has been met with mixed results, leading to both victories and stalemates in the complex world of international trade. One of the most notable examples of this approach has been the renegotiation of the North American Free Trade Agreement, or NAFTA. The Trump administration successfully renegotiated this deal with Canada and Mexico, resulting in the United States-Mexico-Canada Agreement, or USMCA. This new agreement, while containing some concessions from all sides, largely preserved the free trade zone between the three countries. However, the president's use of tariffs has also led to trade disputes, most notably with China. The ongoing trade war between the world's two largest economies has resulted in tit-for-tat tariffs on billions of dollars worth of goods. This has created uncertainty for businesses and consumers alike, potentially hindering global economic growth. The delay in new tariffs on China suggests a potential thawing in relations, but the situation remains fluid. The president's use of tariffs as a negotiating tactic has undoubtedly disrupted the global trade landscape, and its long-term consequences are still unfolding. Beyond the immediate economic implications, President Trump's actions also reflect broader concerns about national security, particularly in the realm of technology. One high-profile example of this is the scrutiny faced by TikTok, the popular social media app owned by Chinese company ByteDance. The Trump administration has expressed concerns that TikTok's data collection practices could pose a risk to U.S. national security, alleging that the Chinese government could potentially access user data. These concerns have led to calls for TikTok to be banned in the United States or for its U.S. operations to be sold to an American company. While TikTok has repeatedly denied these allegations, the situation highlights the growing tensions between the United States and China in the tech sector. As technology becomes increasingly intertwined with national security, these tensions are likely to persist. The scrutiny faced by TikTok is not an isolated incident. The Trump administration has also taken aim at other Chinese tech companies, such as Huawei, over similar national security concerns. This suggests a broader trend of the United States taking a more assertive stance in protecting its technological interests. The market's positive reaction to the tariff delay suggests that investors are hopeful for a resolution to the ongoing trade disputes. However, market analysts caution against excessive optimism, emphasizing that significant uncertainties remain. The trade war with China is far from over and the potential for future escalation remains. Any further deterioration in U.S.-China relations could quickly reignite market volatility. Additionally, other geopolitical risks, such as tensions in the Middle East, could also spook investors. Despite these risks, there are also reasons for cautious optimism. The U.S. economy remains strong, with low unemployment and steady economic growth. Additionally, the Federal Reserve has signaled its willingness to cut interest rates if necessary to support the economy, which could provide a buffer against any potential shocks. For investors, navigating this uncertain landscape requires a balanced approach. Diversification across different asset classes remains crucial, as does a long-term investment horizon. While short-term market fluctuations are inevitable, over the long term, economic fundamentals and corporate earnings will ultimately drive market performance.